So Trump administration may declare housing emergency. What they're talking about right now, what I think they're gonna do, and big two elephants that they're not gonna touch. And I will share my 10 ways to actually improve housing market, which I don't think they care enough to do any of these. Maybe 2 or 3 out of 10. Hey, welcome back to my channel. This is Shawn, the Realtor guy from Portland, Oregon. So I think about 6 days ago, Scott Bessent, the Treasury Secretary, said that they may declare housing emergency because home affordability is so low, people can't buy homes, and adding economic stress to American people. So they're going to look at maybe standardizing the local building code and zoning and things like that to make home building more easier. And also they're going to look at decreasing like closing costs or home buying costs, and then look at some of the tariff exemption for the building materials. They only talked about those 3 things to look at to improve. And I don't think they're smart enough or care enough to look at really deep down and look at all the problems and come up with a solution. They're going to just do the surface level, in my opinion. And one thing that they don't think about, or they don't know, or they don't care, is that building more homes doesn't fix the issue. They're just talking about the basic concept of the supply and demand, right? So at really dumb level, when there's more supply, sure, the price should come down. But what they're not smart enough to know is if there are a bunch of new homes, they don't sell it at a lower price. Because brand new homes, prices are set by the base of the resale homes, the used homes. Let me give you an example. If they build a home in a neighborhood, same size, comparable homes are selling at $500,000. The brand new home builders aren't going to price it at $850,000 because then buyers are not going to buy. But they have to price somewhere in $650,000, maybe $670,000. When the buyer sees that brand new one is about $150,000 more, I'll buy it. If it's more than $200,000, they're gonna just go buy the used home. The other thing is, if the builders actually save money, they estimate about 25% of the home building costs goes into the regulations and zoning fees and this and that. Well, that's what the National Association of the Home Builders are saying. And let's assume that that is true. Let's say they save 25% on building homes. Do you think that the builders are going to list those homes 25% lower price? Or are they going to just list at the same price and make 25% more profit? You think about that. Why would they lower the price when they save money? So it's like a very dumb approach in my opinion. There are other ways that I think they can actually make this work. The idea is good. Like, standardizing, more efficient of the local zoning and make it, standardized, because we don't need bunch of bureaucratic small local governments making bunch of rules to make it really hard to build. But what I think will be done by the federal government is opening up a federal land and sell it to their friend home builders, because that's where money making is happening. Sure, that's going to help the local economy because it's going to create the job, but does it really solve the affordability and supply and demand issue? I don't think so, unless you touch on capping the foreign investors or big time investors or hedge fund investors buying up these primary homes. That I'm going to cover that at the later part of this video, what White House can actually do. if they're watching this video. Let's talk about the two big elephants in the room that they're not going to talk about. The first one is the hedge fund investors buying up thousands of homes in this country because they're the power, the real power with the money in the world. They probably have a bunch of buddies in the White House right now who are those companies. And so White House wouldn't touch this, I don't think. And it affects the home supply and demand and affordability directly because I've seen it. I've seen where investors beat out on first-time home buyers many, many times. Even first-time home buyers can afford to buy a home, they just cannot compete against big pocket investors. Whether they're mop and pop investors with the cash, they own like 3-4 homes, or whether they're like own 10,000 homes, regular home buyers cannot compete. So renting American Dream is more reality now. There should be a show called Renting American Dream. The second elephant, it's a pretty big one too, that they're not going to talk about, or maybe they should. They should, I think, talk about is inflated home price due to the monetary policy and money printing during 2020 and 2022. That's what really broke the housing market, in my opinion. Because it inflated price way faster than 4% or 5% traditionally what's been happening so far. They basically artificially made the money borrowing so cheap. House prices went up so fast. Now the good news is the market is correcting right now. The sellers are having harder time to sell and the buyers are being sort of cautious. Not just because of the low affordability, but they're waiting for the market to crash a little bit. And market is crashing in a certain sector of the homes. I mean, a certain sector of the country. It is adjusting. The markets went up like 50% in that 2020 and 2022. They're coming down like 10, 15, 20, 25% down, which it should. So the first solution that I'm going to cover that's going to help the affordability and supply and demand, number one, is letting the market correct its course, which is happening. So let it be. That's happening, right? But going back to the two big elephants, they're not going to touch on big investors buying up. They're not going to touch on why we're here. They're not going to talk about that, but they should. It is a political chip. If they're smart, they should use that. Anyways, so let's see. Let's talk about the deregulation, like federal getting into the zoning code and building codes. I don't know how realistic it will be because there's so many different things within the local zone, right? So I don't think they're going to touch on that, and I think it's going to interfere the local government, and which I think they're trying to find the balance with. I don't know if they're going to get into it, but like I said, they're going to open up some federal land. That's their main goal, in my opinion. Now let's talk about the 10 solutions for this problem. The first one is that I just covered, which is happening naturally, which is market is correcting. So let that be, right? Let it be. That's the number one. The number two that's going to improve the home affordability and supply and demand is doing the rate cut, which there should be, with limiting investors buying up lands, homes. Because that's going to be, less inflationary, because home buyers number is going to drop. When the less investors buy up homes, the demand will drop. So even with the same supply, if the demand drops, the price will go down or stay stable. And that's the number 2. Number 3, that could improve the home affordability and supply and demand is making the mortgage assumable. What that means is that if the current homeowners, they have 3% mortgage rate, they can give that to the next buyers. The next buyers can take over that, the assumable loan, which means the buyer can pay probably higher price at the same monthly payment, which means the home seller still can enjoy that equity that they built, and it's going to encourage more home sellers put the house on the market. More home buyers will be able to afford those same homes at the same or less monthly payment. And it's going to make sort of like they call it the money supply, but we need house supply movement. It needs to happen because right now it's all locked because nobody want to sell, not many people can buy. So we gotta make the house transaction flow, not just money supply, but the house supply needs to happen. And that is making the mortgage assumable. Now let's talk about affordability improvement. There are 3 things that I think. The first one is the making more tax credit for primary homeowners. As you might know, right now the mortgage interest is deductible. So that's one good part about buying a house. But what if they make the principal payment deductible? I know it's pretty radical. It's going to be a huge savings. If we are actually making money from the tariffs as they claim, use that money to maybe give the principal payment mortgage principal payment deduction, not just the interest deduction. That's going to encourage more homeowners, more people to buy homes because there is going to be bigger tax savings when you own a home, only for primary, not for the investment. It's kind of a theme here, making investor tougher to invest, making homeowners buy more homes. So it's kind of like that is one of the key ingredient in my opinion. It's kind of like a running theme in these 10 different methods here. The next one, the second way to improve the home affordability is regulating the banking industry. This is kind of like, when you look at different lenders, I'm fine charging different fees, but when it comes to different rates, I'm like, why do they have different rates between the banks? There has to be a sort of like standardized rates. They say something like the mortgage rate is determined by the 10-year treasury bond price plus margin, blah, blah, blah. But when I look at the different rates from the different bank, it tells me that the bankers charge the rate whatever they want to do. It plays completely independent of the Fed funds rate. We know that because when the Fed funds rate went down last year, the mortgage rate went up. So, it's traditional thinking of like looking at these things is just so wrong, I think. So I think there has to be some kind of regulations, kind of like, 2010 was it? Regulating the banks so that they can't give out the loans to, stated income people. Now they have to verify the income and asset and everything. Kind of like that. We need to regulate the banks, how much they can charge on the rate. There has to be some kind of standardization of the mortgage rate. I'm not an expert at this, so maybe people who are more critical of the banking industry, they can come up with better ideas than me, but there has to be some kind of regulations against the bank so that people can be protected in a way. But like I said, charging fees, that's fine. They can charge whatever, and consumers can compare the fees and they can go with it if the rate is the same. But right now, the rates are all over the board. The fees are all over the board. So it's really confusing to even shop around for the rates and fees. And when it's harder to shop around, where it's confusing to compare, that's when the consumers lose and the affordability goes down because it gets more expensive to buy a home. Number 3 of improving home affordability is same idea, but standardizing the property taxes, homeowners insurance, homeowners association, and utilities. Because all these things are right now adding up the home affordability. Adding up so much cost to lower the home affordability. Right now, property tax increases is crazy. Same thing with the homeowners insurance. Homeowners insurance companies can drop homeowners at any reasons. If they see high risk, whatnot, they can just drop them. That has to be somewhat regulated, especially when homeowners are hooked to mortgage and insurance. What I mean by that is when you have a mortgage, you have to have an insurance. If your mortgage insurance drop the insurance, the mortgage company can buy any kind of rate insurance and attach to it because they are part of the owner. They still have some of the ownership when you have a mortgage. Homeowners may not have any choice. Other than if you don't pay that, you can get foreclosed on not paying the insurance, property taxes, even homeowners association fees. It's like wild, wild west. So the state government on property tax is wild, wild west because there's no same rate in one city sometimes. Like Washington County, Multnomah County, rates are completely different. Even within the Washington County, not one pocket is the same rate as next door. There has to be something like, hey, I live in Washington County, Oregon. My property tax rate is 1.2% over price, whatever. But that's not the case. Even my next door neighbor rate is different than mine. So there has to be some kind of, across the board, standardized property tax rate. Same thing with the homeowners insurance. You just can't drop homeowners insurance because there's some, whatever's around and this is that and roof is that. Apparently some homeowners insurance companies send out drones to check on your roof, and if your roof looks bad, they can just raise the fee or drop you. Go out and verify that, but I saw a consumer making a news channel report about this. Homeowners association, where do I even start? Homeowners association can fine you if you don't put your trash can in the first day back into your garage. You can't even leave. Actually, that is my homeowner association. I haven't gotten fined, but I did get letter, I think. No, it was about the yard maintenance one time. But the rule is that you cannot have the trash can outside of the house, so you have to put it in the garage. Those small rules are okay as long as enforcing those laws can result in losing a home, and raising the fee too. It can go like wild, wild west. In my opinion, when you have $100 homeowners association fee on a home, it limits how much home can appreciate. The bigger the homeowners association fee gets, the smaller the home appreciation gets. So it's like a seesaw. When the homeowners association gets more expensive, the home price goes down. When the homeowners association fee goes lower, the home price go up. And so when it comes to home affordability, homeowners association fee increase is actually lowering the affordability because it has to come out of the buyer's pocket. And I see often, to be honest, like I said, the homes with the high homeowners association fees, it's not as attractive. It doesn't appreciate as well. There are more issues. They manage poorly. They seem to have special assessments all the time in this, townhomes and condos. It's a mess, and it's just going out of control. In my opinion, brand new homes in Hillsborough right now, homeowners association fee shouldn't be $150 a month. I don't think there should be, because it affects the home affordability. I could see that in gated community, sure, but yeah, it's a problem. And there's a lot of horror stories out there about the homeowners association just going wild, wild west. Same thing with the utilities. I'll just touch on that briefly, but how often do we need to call Comcast because they just raised the fee by 50%? They give you introductory rate, 6 months, 1 year, and then after that they just boom, raise it. It just really annoys me when that happens. People are busy, but they're using the system to hook you in, and they just raise as much as they can. And I don't even know water, electricity. Is there any regulations on that? And I think there should be, because it affects the home affordability. That actually raised me a question. When we changed to LED lights 15 years ago all across the board because of the greenhouse effect, we need to change these light bulbs to save energy, blah blah blah. I don't think I've seen a dramatic electricity costs going down because of these energy saving LED lights. Who actually took that profit? Did electricity companies give us a feedback or lower the utility costs? I don't think so. So something has to be checked. There should be some oversight in this. The banking, insurance, property taxes, homeowners association, utility companies. And going back to the homeowners insurance who can drop and everything, it's borderline antitrust law there, because it is not manipulation. It's a monopoly, first of all. Yes, people can shop around, but when the insurance is not offered in your city, that's problem. So some maybe antitrust law attorneys need to look into this insurance industry. But the problem is, I'm sure there are some buddies of insurance companies in the White House right now. So yeah, I don't see that ever happening. Now let's talk about the 4 ways to improve supply and demand. The first one is building brand new homes only for primary residents with promise of staying there for 3 years. Right now, the primary loan is you're supposed to stay there for 1 year, so it's really easy to play the system, which now we hear about some politicians getting caught doing the mortgage fraud. Mortgage fraud is basically saying, I'm buying a primary home and let me get the lower rate. But when you buy multiple homes within 2 years, all of them are primary homes and primary rates. That is mortgage fraud. So what I'm saying here is that if they actually build homes for first-time home buyers or repeat home buyers, they're going to stay there for 3 years. It will make it tougher for either mortgage fraudsters or investors to buy those up. And it's going to then help more individual home ownership, not a investor increasing their portfolios. And this is where, I could see some like federal assistance on if you as a home builder, you encourage individual home ownership, maybe give them a little bit of tax benefit to those home builders who encourage the individual home ownership, and hopefully they build more smaller homes without HOA. And if those things are met, I would be fine if they open up federal lands to build more homes. But if those things are not met, opening up federal lands to give to their home builder friends, then I'm not okay with it, because those home builder friends are only going to build very expensive homes. That doesn't really fix the housing emergency problems, right? And so I know this is kind of like bigger topic than I could possibly chew on this video. The video is getting long, so I'll jump over to the next one. The second way to improve the supply and demand is making LLC more transparent. Because right now, big investors, small investors, it's so easy to make LLC and buy a bunch of real estate properties in different names. They talk a lot about Blackstone, which is, I believe, it's the real estate investing hedge fund capital group. What we don't know is how many micro LLCs that they're controlling. So there's no way to really know how many of these homes are being bought by these capital funds. When we don't have that data, how can you regulate? How can you fix? I mean, that's the one big issue right now. So make it as transparent as possible, so we know exactly how many homes big companies like Blackstone's own. Blackstone is one of the biggest one, or the biggest one, but there's so many other investment groups like this that we don't even know. There's no way to really track how many homes are actually owned by the investors, so that they can rent out the American dreams to regular people. So we need to make that transparent. The third way to improve the supply and demand is limit foreign investors purchasing. I'm talking about like front-end FIRPTA-like system. FIRPTA is the foreign investor in real estate property tax act. It's kind of a long one. So what they do is they're basically taxing when the foreign investors sell the property, they tax at the end. So they make sure to pay the capital gain tax of that. I think they have to save up like 20% or something. But they end up paying the tax. But what I'm saying is, do that on the front end. When those foreign investors buy our properties, they have to do something on the front end FIRPTA Tax Act. That's what I'm talking about, so that it can actually limit some of that. There were periods that I was in a big office here in Portland, Oregon. Some of these, Chinese brokers, I'm not against anything, but Chinese investors flying in here and buying a bunch of properties and leave in one weekend, that I have problems with. So that's where they need to make some kind of front-end FIRPTA. So if they are going to invest in real estate as a foreign investor, they need to either pay heavier tax or heavier regulations or something. Completely banning, I'm not sure if that's even possible. But yeah, I mean, home buyers in the States are competing against those foreign investors. And when that happens, the domestic individual homeowners cannot compete because they bring in big cash, right? So now let's go into, so that one is the limit. So that's number 3. Number 4. Where's my number 4? Oh yeah. Number 4, number 4, the ways to improve supply and demand is raising the capital gain exemption on primary from $250,000 per individual to $500,000. $250,000 per person exemption is just not enough. That might have worked in 1990s, but not in 2025. And it basically limits the homeowners put their house on the market, because a lot of homeowners who lived there for 20 years, 25 years, they gained more than $250,000. It's going to make them hesitate to put the house on the market to sell because of the big capital gain tax hit. And so in modern day, either just get rid of that completely or at least double it to $500,000 per person. Then it's going to have more house on the market. They're going to put their house on the market more, and there are more choices for the buyers, and that takes care of the supply side of things. And I think it's going to make that property flow. We need some property flow, not cash flow, but property flow. That's what's missing right now. So that is the 4th one, the raising the capital gain exemption from 250 to 500K. That actually that they could do. So out of all this, like I said, I don't think White House would do all of this. If they do all of these things, I think it can actually fix the problem. But realistically speaking, they might do maybe 2 or 3 of these. Probably the last one, raising that exemption from 250 to 5, they actually could do it. It doesn't really bother anyone, like the state or anything. They could do it. The other thing that they could possibly do is possibly the mortgage principal deduction. If they're making a lot of money from tariffs, they might actually could do this. The 3rd one, making brand new home into a primary only for 3 years, encouraging that, giving some tax benefits, and I'm not sure if they will do it. So I covered quite a bit on this video, and I'll try to make into a key point and make into my blog post so you can actually read this, which will hopefully then make better sense than me just jumping all over the board here. But there are basically 10 ways to fix the housing problem, really. And I talked about the 2 big elephants that they're not going to touch. But I hope this helps. I hope White House actually watch my video and implement more than 2 of the 10. If they implement 5 or more, we can actually fix some of these housing emergency problems. So I know it's quite a bit, but I'd love to hear your thoughts. Did I cover everything? Probably not. No, definitely not. There's more things that I don't see. I didn't cover in this video, but I'd love to hear your thoughts. I know a lot of haters will comment too, probably. And so what do you know? That type of thing. And you're wrong, this and that. But a lot of investors are going to hate this video. That's for sure. But do I care? No, I don't care. So thanks for watching. Hit the like button and subscribe if you haven't. Have a great day. See you in the next video.